Good morning, traders. Richard here, a quick Ichimoku cloud chart and artificial intelligence trading review of CrowdStrike. CRWD.O is the Metastock ticker. Now I've got the weekly Ichimoku cloud up here. We can see we quite extended from the top in the cloud. A tremendous rally recently, very extended. So we're moving into profit taking zone, so to speak. I've got a trailing stop of just about 12% there, just under the $200 there. Keep that support zone there. Just below the $200 is a trailing stop there now. The Fulgent AI engine's got a 17% trailing stop, roughly at 183. But in view of the results coming out later in August, I would move the trailing stop up much tighter, because this is quite a parabolic vertical move. And when it gets too far extended from the Ichimoku cloud, we do get kind of mean reversion. So we can see a consolidation back to retrace at least 28%. 0.3% or 38% Fibonacci retracement of this particular move. So just keeping that trailing stop going higher as the market goes higher, and CrowdStrike needs to complete this parabolic move. But you can see using Ichimoku clouds and the AI volatility breakout signal really gave us quite a lot of trades to take off the weekly Ichimoku cloud. It's just that the risk factor now is we're very concerned about this parabolic move, and it's just too much too soon, so to speak. That cloud chart rebound buy when it found support there at the bottom end of the Ichimoku cloud was up 134% alone, and you can see the volatility breakout trades pretty much close to that as well. Let's take a look at the daily one. Yeah, you can see nice volatility breakout signals here back in March. We got a cloud chart cross buy signal there as well, back in bullish territory. Price action above the cloud is bullish, and we had a strong rally consolidation back down to the standard line Ichimoku cloud. You can see the beautiful rebound there from the standard line, and then another rally up, become extended from the top in the cloud, consolidation back, looking for support at the top end of the front end of the cloud. We can see there that support zone there, as well as these old highs there were retested for support, and then we had another little rebound buy there. Now we could see that we're going to do a third wave up, strong move, pullback, strong move, pullback. So this rally can last up to about, let's say 240, and then we'll see if it's going to consolidate back from that, because every time it gets too far extended from the top in the cloud, we do get a bit of a consolidation. So it's just broken out of this period here, and that's the upside target there, is 240 on this chart. Just keep moving the trailing stop up as the rally keeps going. So far so good. CrowdStrike, great trades using Ichimoku clouds and artificial intelligence together. Now let's just go and take a look at the risk factors, and I'm going to look at the StarMine data, the StarMine models. These are institutional rankings. Various thousands of data points go into these rankings, and we can look at the earnings quality rank, where we drill deep into the balance sheet and income statement, line item by line item, year over year, and we use the quantitative analysis to see what is the sustainability of the earnings. So it's just met, there's a 75% percentile rank, so it is in the top 30% of the market. It's not the highest quality earnings out there, but nevertheless it is starting to become green. It's just met the minimum of a percentile rank of 70. Incidentally, if we start ranking the year-over-year growth rates in CrowdStrike, that is a little bit below the 70 percentile rank. On a gap basis, that's about 68, 67, 68. So it can really improve. Credit score risk there's not much credit score risk, a bit structural credit risk there. But combined and smart ratios there, the credit score is still looking good. The risk factor here is the relative valuation. You can see globally ranking CrowdStrike on a valuation basis. Globally, it ranks in the bottom 10% of the market in almost every metric possible there. So it's quite a high risk stock. The stock's really got to deliver. Market expectation is quite high. Intrinsic valuation ranking is in the bottom 1% of the market. Relative valuation is in the bottom 7% of the market. So it's not ranking favorably on a valuation basis. So we've been trading it on a strong momentum play, but it's not really there from an intrinsic valuation and relative valuation basis. The other thing to watch out for, there's more insiders selling than buying, and they've been consistently offloading the stock. So the percentile rank for insider buying is about in the bottom bottom 23% first star ranking of the market. So there is a significant risk factor there. The combined alpha model, where we combined almost all the StarMine rankings into one predictive model, is in the bottom 20% of the market with a per star rank of 18. So there's significant risk in CrowdStrike at these price levels. Now, if we just drill back down and we look at the StarMine smart estimates, and where we track the most accurate analyst estimates, the most consistently accurate analyst estimates, and we reverse engineer that using a reverse discounted cash flow model, we can see the market implied growth rate is currently 38%, whereas the smart growth rate, where the analysts expecting 13% growth. So you can see the market expectation, the current price is implying exceptionally high growth rate expectations. So there can be significant disappointment coming through in the coming earnings release, so be aware of that. This is a beautiful calculation to do, because you input the stock price and it comes out with a growth rate. So it's a reverse discounted cash flow analysis. And if we look at the year-over-year growth rates, went through deep water in 2025, and the stock corrected quite a lot on the back of that. We had 64% drop in earnings, 71%, and then 72%, and then it started to recover, 80% drop there, and then it started to recover with a 10% drop year-over-year, a 3.2% growth rate for the October quarter, and then once again 8.7% for January 2026. And where do we stand now? We've just in April quarter, we've done 50% growth rate, and the year-over-year growth rate expected by the market is 25% going forward, 28%, 26% there, and then 28% in 2028. So you can see it's above the 25 to 30% growth rates there expected for CrowdStrike. So far so good. It's been recovering on an earnings level. It's not the best there yet, but wouldn't turn down a 50% earnings growth rate, as it now re-accelerated after posting significant losses on a earnings growth basis. So all in all, the StarMine rankings are not looking too good. If we just look at the bullish and bearish case there, price momentum score is very high, where it's a relative price momentum. That's a very, very strong score, so that's fantastic. High score there. Short interest is low, earnings quality is high, credit risk is looking good, smart ratios are looking good, the 82 per star ranking. It's just that on evaluation, momentum score, intrinsic valuation, relative valuation, insider selling, and combined alpha model, we're not looking too good there. So you can kind of take your pick as to how you want to your reasons for trading it. But so far so good. Very, very strong move in the stock. If we go back to the charts, you're just keeping those trailing stops in place as the rally unfolds. And I've got a $240 upside target, and I think the results are coming out on the 26th of August reporting date. So analysts are expecting a slight predicted surprise there. Well, not for the July quarter, but for the next year outlook, of slight surprise there if we look at these predicted surprises there. But so far so good. It's been a fantastic rally using the artificial intelligence, both on the weekly and daily, in combination with Ichimoku clouds, and just keep a close eye out on the trailing stop as the rally is on its way to possibly hit that 240 target to the upside. Thank you for watching. Until next time, happy cloud chart and AI trading. Bye for now.